Alrighty guys, the last thing we're going to be looking at is charting patterns that don't have to deal with triangles as well as gaps. So the first one we're going to look at is a pattern called head and shoulders. So as you can see, it's kind of like different like peaks. It has like a mountain basically. First peak is the left shoulder. Sorry, I keep forgetting it's flipped. The left shoulder. The higher peak is considered the head, and then the bottom right peak is considered the right shoulder. So you want those shoulders to kind of be leveled. They can't be slanted, just as long as the bottom, which is the neckline of the shoulders, is also slanted. So in this case, as you can see, the shoulders are basically at the same height. And if we were to draw like a resistance line, they're basically at the exact same level. So you have nothing really to worry about for this one, for it being slanted. So you basically see it form, it hit this level of 448, go all the way up to here to 472, comes back down, comes back up, makes a higher high, lower high, and then you play this downside move when you get confirmation. And like we talked about before, candlesticks, you see this is a bearish engulfing candle. You can expect a downwards move. And since it's, and when you pair it up with the head and shoulders, it's even a stronger confirmation that, hey, this is gonna happen. And I deleted it, but there's actually volume on this candle as well, which is another confirmation telling you, watch the fuck out, this shit finna die. So you probably would have gotten SPXS shares, and you would expect it to go all the way back down to this 448 level. But the thing is though, is that there's gaps to be filled. I forgot what the statistic is, but basically it says that 75% of gaps get filled with the next few days. I think it's 92 or 93% of all gaps get filled at one point in time, whether it be in the near term or in the long term. And basically gaps are created whenever the closing price of the previous day is much lower or much higher than the next day's open. And that happens because there's things called futures that run 24/7, or actually 24/5, because it's from Sunday all the way up until Friday, that run. And basically news events change the price overnight, and that's why swing traders used to get clapped whenever there's bad news. Like whenever Russia invaded Ukraine, you know, this was our close for that on the 23rd of February, but the 24th of February we opened all the way down here. This was what, a 3% move to the downside over news that happened overnight. And there's no way we could have controlled this, because we can't trade overnight. Only futures can. So yeah, so these gaps were filled, and once we filled, and they also, not only that, but they act as support and resistance. As you can see, there was resistance here, or support here, and it fought, tried to get back over this, came back down. This acted as support. From there it broke down. This acted as support. This acted as resistance. Then this acted as resistance, and eventually it broke down to the downside underneath the gaps. So the next thing we're going to be looking at is cup and handle formation. So basically what you want to see is, you want to see a big dip, a circular type dip, come all the way back up to where it initially started. So for gold, it was 184, or this specific stock. It's not necessarily gold itself, but it's at 185, and you saw it come back up to this level. One right here, it capped out at 194. We still consider a cup, and you see it go majorly over the initial point, the height it went to. Then you could just discredit it. It's not going to be a cup and handle. But then you see it come back down. It makes a smaller dip, a smaller version of this little circular semicircle, or semi-ellipse, I guess you'd call it. And from there you see it come back up. You could have bought at the bottom and sold when it reached the neckline of this cup. But basically, if this cup and handle does play out, the move you expect is from the height all the way down to the bottom, and you can expect it to go up that much from the bottom of the cup handle. So you can expect this to go to 240. Who knows how long it's going to take for that to happen, because this cup and handle has been forming since 2011. So a 10-year, 11-year move to create this, it probably lasts like a year or two to create that type of move. But it has been moving pretty fast recently, so I wouldn't discredit it or anything. The next one we're going to be talking about is a double top. So basically, whenever, like I mentioned earlier, resistance lines are strong if they could change the trend or if they have multiple touches. In this case, it was in an uptrend. So let me go to my brush tool. So higher lows every single fucking time, higher highs every time, higher high, higher low, and eventually it reached this peak, and from that point on, it started creating lower highs, lower lows, lower highs, lower lows. Technically this broke the trend, but ultimately it did put in a lower low, until eventually it tried to create a different change in the trend. Higher low, higher high, higher low, hit that level again, and eventually it continued the downtrend. So these are strong resistance lines. And if you were to have a third touch on that line, it would be considered a triple top, in which it's very bearish and you can expect it to go down. And also, just because these charting patterns I show you are bearish, that doesn't mean that they have to be bearish. You can have a positive version of these. And on AMD, where is it at? AMD, we have an inverse head and shoulders actually right here. As you can see, let me go and mark it out. You have the left shoulder, the head, right shoulder, and let me go ahead and draw the support line. So in this case, it basically hit the same level right here, the 133 for the left and right shoulder for the peaks, and then the head went higher all the way down. I went lower all the way down to 130. And you probably would have expected this move to go all the way back up to 164, 165. But the thing is, it never made it that high. So that's why it's always good to take profits and have different price targets whenever you're creating a trading plan, just in case it doesn't play out exactly how you wanted it to play out. And again, the same thing is true for the cup and handle. You can have an inverse cup and handle, which basically be bowed at the top, and then you have like a little bow to the bottom. From there, you can expect it to go down the size of the original cup. And same thing, double top, you can have a double bottom, which we actually had on the SPY as well, I think. I don't know, we had a double top right here on the SPY actually. There was a double bottom somewhere. Oh yeah, let's Google Google. Google had a double bottom. Let me clear all these drawings. Fuck. As you can see here, it had a double bottom. Basically reached the same part at the bottom. Right here, it hit twice, as you can see. Boom, boom, and you would have played it to the upside. And if you did, you would have been paid pretty nicely if you would have played options, or even with shares. But this shit's hella expensive. And basically, you just want to use everything you've learned so far in conjunction in order to make a trading plan. So hopefully this helped. I'll put one more video, hopefully being able to wrap everything up together. But yeah, let's go and get to it.